Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, January 31st, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you'll see right here is that the previous session we got our FOMC key level. That is 26.59 here for the ES. That is the 1 o'clock open price Central Time, 2 o'clock open price Eastern Time, right when the report is released there, where the announcement is released. Basically, this right here saw immediate bid action here, where price was immediately bid and continued to trend higher throughout much of the session, held highs into the close for the most part, and now we're holding in a narrow range here, awaiting a slew of earnings, economic reports here, from core PCE price index, initial jobless claims, personal spending. Chicago PMI comes out just after RTH. So that's what's on deck here for the economic calendar. Tomorrow we have the non-farm payroll number that comes out pre-market as well. And we are clearly at an inflection point in the charts here. We've been able to reestablish acceptance back above the 2620 zone. We've pushed to new highs within the current up move with the last 2 days trading, and we're approaching the 27.0375 key level. That's the midpoint of the larger key range, with the bottom being here, 25.29, and that's what we mentioned here. Once we broke above here, the likelihood of reaching 27.0375 increases tremendously, and then we have a shot to go to the other side of the range here at 2800 as well. So far, both of those targets are still in sight. But again, we got to continue to watch that FOMC key level, the new one that just came out. If price can continue to hold above that, we could see price continue higher until we see rejection, at which point we likely come back and retest that level. So continue to watch that level as we head into the new day of trading here. If we take a look here at the NQ, you see very similar price action yesterday. Price went immediately bid off of the FOMC statement and Fed interest rate decision, 45 half. So 67.45 half is the key level there. Price went bid immediately, took off to new highs, approaching 6,900 now. Again, this is the highest highs that we've seen all year here, as price continues to trend higher since the Christmas Day lows. We have seen price reestablish acceptance back above 6,500, 64.80, and that suggested more strength back towards 7,100 to 7,102. We do have a naked FOMC key level here from November 8th. That level was almost hit here and sold off, and now we could be looking at a move all the way back to that level. So right now the uptrend remains intact. Everything suggests more upside price action, unless price cannot hold above the 67.45 half in the near term. That would suggest weakness to come. Alright, taking a look now at crude oil. Here's crude. Again, crude, the ES, the NQ, the broader market, all very highly correlated right now. All of them seeing quite a bit of strength and quite a bit of weakness in December. So very highly correlated over the last quarter plus of trading. And this one is now testing the edge of the key range. So if we zoom in right here, you'll notice that this impulse high right here to this impulse low gives us a key range, of which the upper boundary is right here. It's 54.55, kind of hard to see there, and price is at that zone right now. Again, you can see the FOMC key level right here, 54.42, and price is trading and chopping just around that right now in a very narrow range. 44% of ADR, just 77 ticks of range so far today. Again, this type of behavior can lead to a breakout in either direction. If there's a failure to hold above 54.40, that could open up a return back toward 51 to take out the recent pivot low. Again, these have been very highly correlated markets, so as goes one, likely so goes the others. So we'll continue to watch that. Right now 54 is very clear area of support to watch for early directional bias. Lastly, taking a look at gold futures. This one continues to be quite bullish. It was a buy signal back here on this day. Once we bounce down off of the pivot range here in the uptrending market, also in the trigger zone for the PIMAs. This one has been very nice as it continues to trend higher. Yesterday's FOMC gave us 13.1530 as a key level here, so 1530, and so far price has been straight bid off that level as well, very similar to the other markets. We've had a very solid move higher. 1275.30 is the low right there. That's also the top of the pivot range right to the tick. Price rallied here all the way up, reaching as high as nearly 1330 on the last trading day of the month. Again, anytime you close a month with a pretty big move here, and then you close with the high and the close very near to each other, the first trading day of the month could be a rejection that leads prices back toward the midpoint. Again, 1302.40 will be the level there whenever that occurs. But as of right now, this market remains very, very predominantly bullish. So any counter trend trade should be taken very, very quickly. And you kind of take what you get in that case. Be very mindful of the uptrend, because any pullback to this zone could be a huge buying opportunity for a continuation to 1360 down the road. All right, that is it for now. We'll see how this plays out heading into the last trading day of January. Good luck, trade well, and I'll see you in the trading room. Take care.